Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for October 3rd, 2024. We will start with some sniper trades of the day. All right, this one is one of our focus stocks, Palantir. And this is on a 3-minute chart. And here was yesterday's closing price action in a very tight, sideways, quiet channel. This was the gap opening. This was the opening range, 3 minutes. And then in the second bar, it broke out higher than that. So we get long here. And we're projecting the maximum upward move would be from the low of the day, which is here, to a plus range stat. So it can travel. We look at Palantir here real quick. Palantir has a range stat of $1.62, so it could travel $1.62 from 37.50, so that would be 39.10. So it could go basically off the chart. That's how high this thing can go on a maximum reasonable intraday move. So we get our long position in by rule. That's our standard risk box. It just takes off like a scalded ape. I take the skin of the dragon exit. I don't want it to let it come all the way back to the VWAP. Like it would hurt my feelings to let it come all the way back here. Wasn't willing to let it come all the way to the PSAR. I took it at the spine of the dragon. So on 1 unit of risk, we get about plus 2 units of reward. So we're plus 2 for the day on that one. It sells off, holds support at the VWAP, gives me a 1, 2, 3 re-entry on a COTA 2. So I'm long with the same risk box. Basically scratch on the collapse. Try one more COTA 2, and we're able to squeeze out another 1R. So we get a net of 3 on Palantir with no overnight risk. This one is NVIDIA, one of our other focus stocks. Also on 3-minute chart. Here was yesterday's range compression. Here was the close, and today it gapped up to here. There's our OR3. In the next bar, it also takes off. So we're going to be long NVIDIA. Again, that's our standard risk box. I again take the skin of the dragon exit on this one for 3R and nothing the rest of the day. Pretty straightforward. Good day at work. We'll shift to the daily report now. These are the components of the daily report. We're going to highlight just a few of those. That's a recap of the sniper trade of the day. This is our 150-day look back, part of our sniper trading strategy. This pink line is the anchored VWAP, anchored volume weighted average price. That's like the long-term fair value, which is down around 530. You have a 30 period, a 10 period, a 5 period, and a 3 period anchored VWAP. So the short-term money is treating 570 as fair value. This intermediate term, the 30-day, is looking at about 560. So there's been a little bit of a push, but it's rounding off and rolling over. And the fact that all of those VWAPs are coming together at 570 on a Friday, as we're a month away from the election, tells me that tomorrow could be a short, sharp, tactical move out of this compound critical state in either direction. I'm going to make sure that I've locked in my gains from here by having the low of the day and the 5 day and 10 day low being uh, my protective stop. I'm not going to let my index plays go below that level. That way, I've locked in a majority of this move off the retracement. Okay. We're really in the getting ready to test the third leg, actually the fourth leg of this. If you count this as one leg, that's really that move was really three legs. If we look at correctly, right, we're going to see one leg, pause, two legs, pause, third leg, pause, and then that becomes one big leg, and then it goes one, two legs down, and then one leg up, retracement, two legs up, retracement. So now the question is, what does it do? This is the all-time high right here. What's it do here? Is this going to break through to new highs, or does it retrace back to the previous Bollinger Band mean and this swing low around 550, which would be a 50% retracement to the long-term fair value? Or does this find support here at the 10-day low and then break through 575? So that's going to be a key price. 575 is a signal that it's heading north. A breakdown below 565 is heading south. That makes this about a 2% channel, which is about a weekly ATR. And that puts us in a perfectly rational, typical, normal kind of a move. A burst of buying activity, then 10 days of consolidation with backing and filling. So Friday, very good chance for that to be a tactical trading day. Let's see how much they want to hold over the weekend. And this just looks at the last 30 days now, makes it a little bit clearer that we've had basically 10 days of no movement other than some expanding ranges for the traders in here. But the fact that we had an inside day and a doji makes this a compound critical state. So I'm ready to follow price as soon as it breaks out of today's yellow box, which is today's range. And nothing different on the 30-minute bar. So that's this yellow box is today's price action, basically just sideways wait and see. We're in bullish normal. We're overbought on the longer term. We had a little bit of recovery these last 2 days on the 2 day NDX. The volatility is favorable. We've got buy on dip opportunities in EAV or EFA, excuse me, Euro Asia blend, European 350, and the both on channeling and overreaction. Those are very reliable signals historically. So I'll be ready to play the globals tomorrow. Meanwhile, we have Main Street is working well. Home Depot, ExxonMobil, IBM, Chevron, and McDonald's. What's lagging right now is tech, Intel, and Microsoft, for example. Regional banks are also lagging. I had a breakout to the upside in Home Depot, micro, but it was still a breakout. Let's give it a credit. Merck was a breakdown. Microsoft is at a 10-day low. In the ETFs, you had a couple breakouts, minor in oil and energy, a few breakdowns here in XLP and V and treasuries and real estate and small caps, but a ton of auto framers that test out very well. A bunch of 551Ws. Those would be the ones that I'd really be looking to exploit. I think DBA is ready to go. And I'd be looking at the S&P and tech for a second day of follow through. In the auto framer, for those of you working trading swing trading one day at a time. Here's all your framing data in the usual structures. You know how to read that. The daily squeezes, there were a handful today: Morgan, Visa, Boeing, Goldman, Russell, American Express. So the finance sector itself is very tightly squeezed and ready to go. And they are all favorable on the reward to risk ratio. So anything that's a double green is going to be a priority. So I like both the S&P and the small caps. This is our TC 2000 implementation of the auto framer. Everything above this red line, this is sorted by reward to risk ratio to back to a test of the 10-day high, using today's range as the risk box, and that everything above the line is better than 2 to 1. So U.S. Steel, Disney, Microsoft, regional banks, real estate, and treasuries all look attractive. These ones that are down here around zero reward to risk, that means they're all near their 10-day highs. So that could actually be a place where you find something like PTIR, which is a double leveraged Palantir. So Palantir has an ETF that's double leveraged, and that's PTIR, not for the faint of heart. NVIDIA had a pretty good day today as well. Uh, the fall is starting to dominate now. That means we've crested and it's rolling back and backing and filling. The ones in the green in the summer are ones that are really continuing to stretch their legs. I love Caterpillar, Home Depot, and McDonald's right now in Main Street. The multiple time frame NDXs, it was a mixed bag today with a few showing some strength, but more showing some give backs and a little bit of a breakdown. Um, when the range is that narrow, that's not surprising to see some reds, but that's actually some things that could be considered as value plays, like Microsoft, Coca-Cola, and Tesla all fall into that boat. The trading value list, this is multiplying the range percentage of the last 30 days times its frog quality number to give you a trading value ratio, and higher is better. And so that the ones that are these are all liquid, they're all very volatile and have been reliably volatile. Marijuana, Tesla, Nvidia, Intel, Devon, Mexico. That's why we trade those quite a lot. Just a quick look at some of the market conditions, nothing unusual here. When we look at the Z-scores, we see the 30 period starting to roll up. That is a healthy sign for potential upside movement, because that's the health of the market. The 10 has pulled back a little bit, right back to the zero line. This would be a natural place for it to find support. If it does, look for 2 or 3 days of continuous activity. The 90 has flattened out and is getting ready to rejoin the move. So there is a good chance of a one more run before the election, and we'll be ready for tactical trading. It's tactical trading only for the next month until we get politics all sorted out. All right, that's everything for today. We'll get this published and posted. Still have a few slots left in the small group coaching. If you're interested, give me a shout and we'll get that happening for you. The first official meeting of that group is next Wednesday, and they'll be meeting on Wednesday nights for cohort 4. All right, take good care and keep your wrist measured and your powder dry.